Karthik, hello? Karthik, what did you do? Very performance. Not visible. I will connect it. Okay. The revision kit and the budgeting and control. Page 10 of the revision kit. Just tell me which questions we've already done. Page 10 in your revision. Kappa, Kappa. So I want to do two questions on budgeting and control. Then I want to do some questions on decision making techniques. Next week we'll do a mock. Ashwa and Gayatri, Salma is also here with us. How are you all doing? Everyone doing well? Ashwa, Gayatri, and Salma, if you can just scan this QR code that is given on the screen and mark your attendance. Much appreciated. Yes. We didn't do Kappa. Okay. Once you scan and mark your attendance, please just drop a message on the Zoom chat so I can just check to see if you have got registered, right? We didn't do Kappa. So today's plan, I was just talking, I don't know if you heard, but plan is to look at a few, maybe two questions from variances, two questions from decision making techniques. We have 3 hours. I know might not be sufficient, but we'll try. Okay. Did you all mark your attendance? Ashwa, Gayatri, and Salman, did you scan this and mark it? Hello, can you hear me? Not working. Ashwa and Gayatri, were you able to mark? Salma says it's not working.
No, so it's not working for
Gayatri,
me
I think
either.
you're saying something, but I can't seem to hear you. The volume.
It's not working for me either, sir.
Thank you. How much is it? Gayatri, what were you saying? Sorry, I couldn't hear you.
It's not working for
I
me
still
either,
can't
sir.
hear. I don't know. Something wrong with the system. I can't hear the sound. The students are speaking, but I don't hear the sound. Is it then correct? There you go. No, no, it's full. I increase the volume. They can't hear me properly. Why? They can't hear me. Hear you? No, now they're sending a message. We can't hear you properly. No, no. Let's see. We'll first figure out the sound. Okay, anyways. That's fine. Save type, I think. Let's see. Done. Let's go. And please speak. Can't connect to the TV. Is it TV? Yeah, connect to TV. Okay. Gayatri, can you just say something again? Just trying to check the sound.
So I said that the QR code wasn't working.
Can you say that, Gayatri?
Sir,
Oh, better. Thank you. Now we can hear.
I
Okay,
said
sorry,
that the QR code wasn't.
not working. Okay.
No.
Let's try to fix it during the class. Uh, just a quick one. So last week we looked at performance measurement. So hope we are okay with those areas. Today, plan is to do a couple of questions from budgeting and control, and maybe a couple of questions from decision making techniques, right? So there was a special request to do a question on linear programming. I will do one question on that as well for certain today, and we'll do some other question that you all feel like you all want me to work on. Okay. Right. So in terms of budgeting and control, I think we have done quite a bit in terms of variances, but we'll just do one question. I think according to our friend here, Fahad, he says we have not done this question called Kappa Company. Kappa Company. Can you quickly move to Kappa Company? Just check whether we have done it in Fahad's absence, but I don't think he got absent any day. Do you absent any? All right. Okay. Have we done this question called Kappa? I have to. Yeah. Okay. Here, one thing. The example loaded is a different one.
No, we not feel.
The wrong example. Don't worry, what has been said?
This your title book is okay, right?
That's it. Let's read.
This one is fine.
Yeah. It should be okay for now. Okay. So we're looking at this question called Kappa. Have you done this before? For me, I feel like we have done it before. If you all say no, then we can do it. Okay. I think looks like we have not done it before. So let's quickly run through this question. It says Kappa company produces omega, an animal feed made by mixing and heating three ingredients, alpha, beta, and gamma. Okay. The company uses a standard costing system to monitor its cost, the standard material cost for 100 kilos. Now, this is important. They're giving you the material cost not for 1 kilo, but rather for 100 kilos, right? For 100 kilos of omega is as follows. So, alpha, they're using 40, beta, they're using 60, and gamma, they're using 20, and the cost per kilo is also given 2, 5, and 1. Now, if I was you, I would quickly calculate a ratio maybe, or your standard mix, which is 40 over 120, 60 over 120, and 20 over 120. Right? That's your standard mix. Then they say the cost per 100 kilograms of omega is given 80, 300, and 20. So the mixing and heating process is subject to a standard evaporation loss. Okay. Then alpha, beta, and gamma are agricultural products, and their quality and price vary significantly from year to year. Standard prices are set at the average market price over the last 5 years. Kappa company has a purchasing manager who is responsible for pricing and supplier contracts. The standard mix is set by the finance department. The last time this was done was at the product launch, which was 5 years ago. It has not changed since. Last month, 4,600 kilograms of omega was produced using the following inputs. So they've given you alpha 2,200 kilos at 1 point per kilo for total cost, beta 2,500 at 6, and gamma 920 at 1. At the end of each month, the production manager receives a standard cost operating statement from Kappa company's performance manager. The statement contains material price and usage variances, labor rate and efficiency variances, and overhead expenditure and efficiency variances for the previous month. No commentary on the variances is given, and the production manager receives no further feedback on the efficiency of the omega process. Calculate the following variances for the last month: material usage variance, total mix variance, total material yield variance. Okay, so they're giving you close to 11 marks there. Material usage variance for each ingredient and in total. So there is 3 ingredients. And then in total would make it 4. So 4 marks, which is 1 mark into 4 parts. Right? So 1 mark into 4 parts. Total material 4 marks, yield variance straight away 3 marks. So this is 11 marks. Okay. Always think of it this way. This 11 marks is so important. Out of your total 50. Why 50? Pass mark is 50. First you have to secure your pass. Then you can think about etc. Okay. So 11 out of 50 means close to 20%, right? So this will give you 20% of your pass mark. So if you can do this, 20% has been passed. The rest you should be able to manage. Okay. Right. Let's break down our problems. Okay, we'll start with material usage variance quickly for each ingredient. Mirtula, you're new to class. I haven't seen or heard of you before. First time you're joining in. You're willing to, you're okay to type in your answer, or you can even unmute and speak. Either is okay. Okay. Have you done performance management before? And just for clarification, you're from Sri Lanka, right? Okay, let's quickly do the usage variance. Just in case you can't recall how to do your usage variance, it's basically the second part of the diagram I gave you, which is actual quantity into standard price and standard quantity into standard price. Okay. So to make life easy, what you can do at the exam, okay? What you can do at the exam is you can have AQ into AP as, sorry, not AP, SP into as one column. Then you can have SQ into SP as another column. Then your difference is your variance as another column. Then you can work downwards for your 3 materials, alpha, beta, and gamma. Right? So actual quantity is given to us already. So we have actual quantity of 2200 of alpha into your standard price. What is your standard price for alpha? $2. Right? If you want, you can take totals. If not, you can leave it out. But for your benefit, let's take totals. So this would give you 4,400. Then beta used 2,500 into 5. So 2,500 into 5 should give you 12,500. And then gamma used 920 into 1. 920. Yeah.
The exact dynamic doesn't have this question.
The one I sent you?
Yeah.
Yeah. I'm looking same thing, 23, 24, right? Page 232. Okay. Right, then SQ into SP. So SQ, you have to be very careful. SQ, you're looking at how much you should have used for actual production, right? So SQ, how much for actual production? How much for actual production? Right? So that's your SQ. So how much have you used for actual production? Or should you have used for actual production? How much should you have used for actual production? So 4,600 is your actual quantities. For every 100 kilograms, you're using 40 of alpha. So 40 divided by 100 multiplied by 4,600. This will give you your standard quantity into your standard price of 2. Right? Then here you get 60 over 100 into 4,600 into 5. And here you'll take it as 20 over 100 into 4,600. Okay.
120.
Which one?
The 40 or plus.
You're saying
Standard 40.
yeah. But see, for every there's a process loss, no? There is a process loss. So when you feed in 120, you don't get 120 out. You get only 100. So when you want 100, you have to feed 40. You got my point? For your output of 100, you have to feed in 40. So if you do a cross multiplication, very simple cross multiplication, 40, you get 100 out. For 4,600, how much do you need? Okay, that's why I divide by 100. Okay. So 4,600 into 40% into 2 should give you 3,680. So that difference is 720 adverse, right? Because you spent more than what you require. This is 13,800. 1,300. Favorable. Just take down. This is 920. So no variance. So your total variance 580 favorable. Okay, so that was pretty straightforward. Yeah, thank you, Ashraf. Very good. Okay. Right. Now you can move to working out your mix and yield variance quickly. Work out your mix and yield variance. Right. If you can't recall, it's fine because this is still revision. So you can go back to your note and try to calculate. In that case, ideally you should have got an output also of 150. Yeah, then you will definitely be taking 150. Okay. Part 2, calculate your mix variance. So how do you calculate mix variance? I think I gave you a table. You can always stick to the same table, right? So you have material, you have your standard mix, right? You have AQAM, you have AQSM. You can take your difference, standard price, and then you get to A. So this is alpha, beta, gamma. Okay. Roll up. How much should you have used for actual production? Right, are we good? Okay, so then calculate your mix variance. Now your standard mix will be very careful. How do you calculate your standard mix in this case? I told you while we were reading the question itself that we could have computed Or if I was you, I would have written down my standard mix. Right? So in this case, my standard mix here is 40 over 120. Here it is 60 over 120. And here it is 20 over 120. So in terms of my input, you had asked this question before. Right? So here we're considering 120, not 100. So you might have the question, okay, why are we considering 120, not 100? Because now we're looking at how much we're inputting only. You got my point? So for the 120 that I'm putting in, 40 has to be alpha. Or in other words, 30% has to be alpha. Right? Okay. So the actual quantity into actual mixers is given 2200, 2500, 920. You can take your total. That is given as 5620 in the question. Okay. Ashwa, you have asked the question, if the answer shows a decimal, do we round it to the nearest whole number? Depending on what the examiner has requested you for, in this case, he is not asking you for anything, he's silent. I would suggest to keep it to 2 decimal places. 2 decimal places. Okay, so how do you calculate AQSM? Obviously, take your total of 5620 and multiplied by the standard mix of 40 over 120. So the first one you get 1873.33. The next one you get 2809. 0.999. So if you round off, it's 2810. And then you get 936.67. Right? So ideally, this has to tally up to 5620, because in a mixed variance, your difference in terms of quantities have to be zero. And don't forget these basic stuff. Huh? So 1873.33 minus 2200 will give you 326.67 negative, which is an adverse variance. 326.67 adverse. Then 2810 minus 2500 gives you 310 favorable. And then 936.67 minus 920 will give you 16.67 favorable. When you add it up, it has to be equal to 0. So multiply by the standard cost per kilo. So this is 2 per kilo. This is 5 per kilo. And this is 1 per kilo. So 326.67 into 2 will give you 653.34 adverse. 310 into 5 will give you 1550 favorable. 16.67 into 1 will give you 16.67 favorable. Plus 1550 minus 653.34 get 913.33. Ashwa, you got a different answer before, right? Please check. Please check. Yes, be careful, be careful. Right. I have Mithul, unfortunately, the first time I'm seeing you, but ACC had asked me to submit names of students who I think will pass this time's exam. Okay. So when ACC asked me who are the students who think will pass the exam, then I asked, okay, who are the students who have applied to the exam? I have to ask that first. Then they said Fahad has applied. I said he will pass. Then they said Ashwa has applied. I said Ashwa will pass. Then they said Gayatri has applied. I said Gayatri will pass. And they said they asked about Salma. I said Salma will pass. Mithul, unfortunately, the first time I'm seeing you, so I couldn't tell anything about you. I don't recall seeing your name on that list also. And then there were 3 people that I asked why they have not applied. Apparently, they have not applied for the exam this time. And there's one more person I said will pass. Akib. No, he's not doing exam. I don't know. Akib, Asia, and Segonia not doing. There's one more person. So you all better keep my name up. I have told that you all will definitely pass. Yeah. I'm sure you all will. Genuinely, I believed that you will pass. Hence, I said you will pass, right? So if I think there are 6 doing the exam this time. Out of the 6, if all 6 of you pass, I get 100% pass rate. It is good achievement. Right, okay. Okay, mixed variance done. Shall we start on yield? So yield, you can use the same table. Like I always say, use the table if you have already computed the mixed variance. If you have not done the mixed variance, then calculating the total way is okay. But in this, you can straight away use the table. It makes life much easier. So you have material, then you have you take from the previous table AQSM. The only thing that you have to compute is SQSM, but SQSM is already computed in your usage variance, right? You've already computed your SQ here. SQSM is the same thing. Okay. Then you take your difference. Then your standard price and your variance. Okay. So you have alpha, beta, gamma. So what does AQSM state? Same values you got before, 1873.33, 2810, 936.67. Okay, how do you calculate SQSM? SQSM, always remember, is the same as SQ here. Same thing, no change. So 40 over 100 into 4600. We'll do the computations. $1,840. Then the next one was 60, that's 2760. And the other one was 20, 920. Now get the difference, 1840 minus 1873.33, get negative 33.33, which is adverse. Standard price was 2. You can multiply it by 2, you get 66.66 adverse. Okay, then the next one, 2760 minus 2810, that is 50 adverse. And then this is 5. So this is 250 adverse. 920 minus 936.67, 16.67 adverse into 1. Get 16.67. So 66.66 plus 250 plus 16.67, get 333.33 adverse. Good, very good. Someone had messaged saying 580 adverse or favorable. Which one was that for? I'm not sure. Sorry, I just saw your message. Salma, you have sent me message 580 favorable. Which one are you referring to? Because I don't see such an answer. If you have gone wrong somewhere, let me know so we can help. Otherwise, this is a problem. Slight mistake. Okay. Don't make slight mistakes. Okay, take it down and then we move to the next part, which is the most important part. Discuss the problems with the current system of calculating and reporting variances for certain performance of the production unit. Okay, see what you can do there. Just write down a few points, we'll discuss. I'm not going to dictate an answer, but just write down a few points and we'll discuss. What are your thoughts? What are your thoughts? So, yeah. Okay, your standards can be outdated because it has not been changed for the last 5 years. That's what they're saying. Yeah. Okay. Very good. That's one point.
And also they are giving any feedbacks on variances.
Okay, they're not giving any feedback on the variances. Okay.
So they couldn't know the efficiency of the production.
Okay. Something you can add to that is it would be better to also go into planning and operational variances. Like planning and operational variances. So you can make these points up. Planning on operational variances, which will then help you understand what is the controllable element and what is the non-controllable element. The other concerning thing is now, if you look at the prices is responsible of the purchasing manager. So any price variance, you can't hold the production manager controllable or responsible because he has nothing to do with the price of the raw materials. It's all the purchasing manager's KPI. Right? The prices are not within his control. So no point looking at a material price variance for him. In terms of usage, like you said, standards are outdated. And therefore, it might look like we're having a favorable variance. Here we had 580 favorable. So if there was 580 favorable, then there's no point. Because the price is not within his control. And in terms of usage, the standards are very old. Very old. And who sets these standards? Finance department. Right. So is the finance department capable of setting these standards? Can be a question mark. Right? Because this can affect the product, ultimate product. Right. So is the finance department the most capable team to set up these standards? Is the question. Okay.
Generally, who sets these standards?
I would say generally it's like the product development team or something like that. Who is responsible in developing the product. It can't be the production manager because he's the one who's controlling the production. So it can't be him. Whether it is finance question, finance will know. All they know is P&L and balance sheet. Okay.
Before we move,
Yeah.
can you explain again that 100 part with the
Okay. Yeah.
uh,
Yeah. So what happens in this? So I'm just explaining to Fahad what he asked, right? So he's asking me in standard quantity. When we calculated standard quantities, we took it as 40 over 100. But when we calculated mix variance, your standard, we took it as 40 over 120. Is your question? Yes. Okay. Standard quantity is basically a measurement of how much should have been used for actual output. My actual output is 4,600. My planned output here was 100. Planned output.
output in the sense percentage?
Planned output in the sense number of kilos I get out. So I'm inputting 120 is a different story, but I'm getting out. So for every 100 kilograms, I had to input 40 units. Therefore, for 4,600 kilograms, how much? That's what it is, cross multiply. That is your standard quantity. In your mixed variance, your standard is basically telling you out of the total input, how much percentage was alpha. So here we're talking about input only.
I think, everything
SK.
is
Okay.
but this we are including.
Yeah.
For the,
So you'll always base it on the input. By SQ, it's always based on output. Okay, anyone else has any questions? Yeah.
So what was that last sentence you just said? SQ.
SQ is based on output. Standard mix is based on input.
Thank you.
The favorable mix variance means they have produced more from the given output. No, they have used material that is cheaper. They have used more of cheaper material than expensive material. Right. So if you look here, Salman, to your question, here they have used more of something that is at 2 kilos, right? Here they have used less, right? I'll use this. Here they have used less than what they planned for a more expensive material, right? I don't know if you were in the class when I taught mixed variance, I taught the example of a watermelon juice. I said if you now recently I went to have an orange juice. Okay. This orange juice, these guys took 6 oranges. Trust me, okay? Not 6, sorry. They took 3 oranges. They cut it in half, it's 6. And they squeezed 3 oranges and made 1 full glass of orange juice. 0 sugar, 0 water, and gave it to me. They charged much higher price, but that was super fresh orange. But if you go to a normal shop, what would they do? They give you orange flavored water. They take 1 orange, they squeeze it, put more water, ice, and sugar, and give you orange juice. Right? So always remember the example of the watermelon juice I gave you in terms of material mix. Watermelon is the most expensive ingredient. If you put less of it, you will have a favorable variance. Why? Because it's the most expensive variable. Other way you can look at it, water is the cheapest variable. If you put more of water, it's the cheapest variable, and therefore you can have a higher profit or a favorable variance. Salma, have I answered your question? Okay, super. Right. Mithula, just asking, do you have the revision kit, Kappa? Mithula? Okay, perfect. Unfortunately, this question is not on this revision kit that I have uploaded here. Let me see. No, it's not here. But go to page 234. Sorry, just keep that question for now. I will quickly do it. Okay, we'll quickly do this question because it's a question on a new area of the syllabus, right? So they can test you in your least squares regression analysis and your forecasting methods. Okay. Okay. So we'll read through the question. It's quite long. Have you found the question? It's called ATD. I don't have it on this revision kit here. ATD question, right? Hope all of you have it. So it says, as you can see, the tutorial note itself says this question is offered for practice on the new syllabus area of forecasting techniques, but students are not to expect this level of complexity in the exam. So this is one of the most complex questions probably that you have. They've just increased the complexity of this question and given it to you. So what happened in this subject was up until 2013-14, they had regression and forecasting techniques in performance management. 2015, let's say 2000, end of 2014, when they did syllabus change, if I remember correctly, they moved it from PM to MA. So they removed it completely from PM. And then they brought it back in 2022 or 23. Okay. So there is potential that you can get a question from this area, but like what these people say, it's not to this level of complexity. Okay. But since we didn't do any questions from this area, we'll just quickly do this question, move on, and then we find more questions. Right. So it says ATD is a medium-sized engineering company providing specialist components for the marine engineering market. The sales manager is currently under pressure from the other departmental managers to explain why the sales revenue forecasts are becoming increasingly unreliable. Salma, I think I sent the revision kit on the group. You on the group? Are you on the group, Salma? On that group revision kit, if you open it, you should have it on page 234. You with me? Salma? Okay. You have it. Okay. It's on the group now. Are you on the group? Yeah. This message has been sent by. I have tagged you on the message. Please check. Download it. And go to page 234. I'm using the same revision kit. Are we okay now? Okay, thank God. Okay. Right. So errors in the sales manager's forecasts on production, inventory control, raw materials purchasing, and ultimately on the profitability of the company itself. They use a combination of experience, intuition, and guesswork to produce their sales forecast, but accept that the forecasts are increasingly inaccurate. Consequently, the sales managers ask the business analyst to investigate more rigorous, appropriate ways of forecasting. The business analyst has suggested two possible alternatives. The first summarized in figure 1 is least squares regression. The second in figure 2 is time series analysis. The actual sales figures in both of these examples are for ATD. So the company is currently in quarter 3, 2023. However, the business analyst has left the company before completing and explaining either the basis for or implications of these two alternative approaches to forecasting. So least squares analysis, they're given you from 2020 quarter 1 up until 2023 quarter 2. So now we're in quarter 3 is what they're saying. The sales are being given X, Y, what is Y? I don't know. Okay, X is the period number quarter, sales is given in Y. Okay, if you look at it, I think it's a typo error. They have to move the sales a little more to Y. So x squared, xy and y squared is given. A value is given, B value is given, R is given. The equation of the straight line is also given, y is equal to A plus BX. So they made it. Time series analysis given. Analysis of the seasonal variation is also given. So they've done the adjustment. Note 1, seasonal variation is given. Adjusted seasonal variation is also given. The analysis also stated that the trend forecast for 2023 quarter 3 will be 151, but has not provided an explanation. Okay, 151. How did you get 151? Yeah, he's got it from the sales adjusted, seasonally adjusted figures, right? So if you look at 151 points, so that's a response. The failure of the company to meet the sales target for quarters 1 and 2 has prompted the CEO to put into place a broad cost-cutting policy. They claim that our failure to meet sales target means we must ruthlessly cut costs. However, many of the departmental managers are critical of such an indiscriminate approach and believe that the measures might be counterproductive. This cost cutting has particularly demotivated the production manager and inventory manager, who both blame the sales director for setting unrealistic targets. The production managers commented that I am working tirelessly to keep costs down, but my only reward is that I cannot replace one of my best purchasing administrators who left last month. In general, departmental managers of the company feel powerless and undervalued. The company currently does not have a formal budgeting process in place. The production managers show that such a process, particularly if senior managers were involved in the budgeting setting process, would help address issues around forecast reliability, the low morale of departmental managers, and the seemingly indiscriminate cost cutting of the CEO. Required forecast sales for 2023 quarter 3 using the least squares analysis method and the time series analysis method. Okay, quickly see if you can work that out. So use your least squares regression analysis. So your equation is y is equals to A plus BX. So A value is given, B value is given. Simple. Okay, done. Right. Looking at part A, on the least squares regression method, y is equals to a plus bx. A is given to us 125.022 plus b 1.84 into x. X is the number of periods. So here we have already finished 14 periods. 2020 quarter 1 to 2023 quarter 2, that is 14. Right, they've given it in sequential order. So which means your x here will be 15 for quarter 3. So based on that, how much are we at? So 125.022 plus 1.84 into 15. So you get 152.622. Have you got that? So 152.622. Okay. Then work out your time series analysis. Time series analysis. Okay. I'm only doing this because we haven't done question like this before. Are they using additive model or multiplicative model here? Looks like they're using an additive model, no? Because they're going to 0. Okay, now 400. So they're using an additive model. So under least squares regression, additive model, how do you calculate your forecast? Trend plus seasonal variation, right? So under time series analysis, your forecast is equals to trend plus seasonal variation. Trend plus seasonal variation. So what is your trend? They are saying for quarter 3, your trend is 151. What is your seasonal variation for quarter 3? Go to your analysis of seasonal variation. You have to consider your seasonal variation adjusted value of 22.55 plus 22.55. So your forecast is 151 plus 22.55. It will give you 173.55. Okay. Right. They're asking you to explain both sales forecasting methods and discuss their benefits for ATD. Section C has 75% theory questions. I wouldn't say yes. I would put it to the recent past. I would put it to like 60-40. Right? 40% calculation, 60% right. Right, 60-40. Okay. So look at this question here. It says explain both sales forecasting methods. Okay, shall we explain what linear or least squares regression is? So you can say least squares analysis, least squares regression analysis, least squares regression analysis. Identifies a straight line, identifies a straight line that is a best fit, that is a best fit to the available data set, to the available data set to the available data set by minimizing any deviations, by minimizing any deviations from the mean or average, you can say, from the average. Okay. Then you can look at, you can say for ATD, now if you look at the quarter sales given, look at the quarter sales under least squares analysis, the table, 2023 quarter 1, 137, quarter 2, 180. Let's go back few quarters, 2022 quarter 3, 169, 2021 quarter 3, 153, 2020 quarter 3, 155. So if you really write it down, what we are saying is 2020 quarter 3 we had 155, 2021 quarter 3 we had 153, 2022 quarter 3 we had 169, and then separately look at 2023 quarter 2 we had 180. But now, if you look at least squares, it's saying 152, which is going to be the lowest quarter 3 figure in the last 4 years. Okay. So we can mention that, you can say for ATD using the least squares might not be the best method, might not be the best method, as it is predicting a value of 152, a value of 152, which is the lowest, in quarter 3 for the last 3 years. However, the least squares analysis has a positive value for B, which indicates an upward trend in the forecast. Right, just read through that and see if it makes some sense, and then we move to time series analysis. Okay. You can say that the time series analysis. The time series analysis uses trends and seasonal for variations. Uses trends and seasonal variations. Uses trends and seasonal variations to calculate the forecast. Calculate the forecast. To calculate the forecast. The trend is generally calculated using a centered moving average. Using a centered moving average. Using a centered moving average. And seasonal variations. Are averaged out. To ensure an average. Ensure an average of 0 across the periods or across the quarters. To stop and say any residual value is then adjusted for before finally computing the seasonal adjusted variances. Full stop and say using an additive model. Forecast is calculated as trend plus seasonal variations. Next line you can say for ATD. This seems to be a better method. as the trend is adjusted for seasonal variations. Adjusted for seasonal variations. Unlike the least squares analysis method, which merely works on a straight line equation. Okay, and that should be sufficient. See if it makes sense. Okay. The next part is not that difficult. They're asking you analyze how the introduction of a formal budgeting process would benefit ATD. So obviously, one is you're setting up realistic targets when you have a budget. There is someone who is responsible and accountable for these targets. There can be a performance measurement system against these budgets to see whether you have achieved it or missed your sales targets or whatever targets. In terms of let's say there's mentioned something about cost cutting in the question. So can you then you can maybe look at whether it is really required to remove all of these costs out. You look at maybe a zero-based budgeting system. Yes, Ashwa says appoint a budget review committee. Yes, you have someone who or committee that is going to review your budget to see whether it is realistic or not, right? So on and so forth, right? And most importantly, you have to mention something about the feedback also, variance. Right. Okay. We'll take a 10-minute breather. We'll get back at 11 and we'll do a few more questions. Okay. I didn't studying so much. How many exams is there? 2.
Those lawyers.
Any facts? When is your tax payment?
For the time being, I will be an environment.
The
The next year after. Basically, like, it's going like,
PM is not doing well.
PM is big, like,
Difficult.
for difficult in the sense, whether,
You will pass.
no, I will pass somehow. So, small, confidence,
You should.
almost like half of, net of the 6 to 7 months doing an exam. Also, it's costly like almost 56,000.
Non-payable, no?
Yeah. Also, my education expenses are paid by my cousin brother who takes it time. So if I fortunately it shouldn't happen. So if I fail though, almost like
Yeah,
it's a huge loss that. So mostly I'm revising the recordings, doing the lesson wise mock, doing the practice question.
Those are okay, no?
As well as I have added to my watch list to some of the answers, the teachers' videos, there are few revisions and something.
Okay.
So, I part of the exam from the exam, the exam.
Should be okay. Don't worry too much. Sure. Let's look at this question. Yeah. This question called ACCA Company. I don't know if you've done this. Page number 230. We'll do one more variance question and then we'll move to the next. Center wrong. Anyways, hope everyone can take that question out. Yeah, it's called Clear Company. Page 230 on your revision kit. Question number 316. Okay. So it says Clear Company is an eye treatment specialist founded in 2024, which runs 5 clinics nationwide. It is based in Zealand, a country in which 20% of the population is over 65 years old, compared to 15% 10 years ago. Clear Company offers 2 eye treatment procedures, laser treatment and lens treatment. Laser treatment is the less complex of the 2 procedures. Technology changes rapidly in this industry, and as a result, 90% of patients now qualify for laser treatment compared to only 80% 5 years ago. The remaining 10% of patients are only able to have lens treatment, of which there are 2 types: refractive lens exchange and implantable contact lenses. Clear Company started providing RLE, a treatment most effective for patients aged 40 or older. In 2024, when it was founded, 2 years ago, it has also began providing ICL, a treatment recommended for patients under the age of 40. The market for eye treatment procedures in Zealand is dominated by a few main suppliers, of which Clear Company is one. Until 2 years ago, Clear Company was the largest supplier, but following the merger of two other companies, it is now the second largest. The merged company, EOS Company, has recently released financial statements for the year showing profits which were 10% higher than forecast. The company's press release stated that it has achieved this despite offering reduced prices for the ICL treatment. It has been able to offer reduced prices because of the economies of scale achieved by the merger. The following information relates to the two types of lens treatments offered by Clear Company for the year ended. So lens treatment, budget actual is given, ICL is given, number of treatments, selling price per treatment, variable cost per treatment. Calculate the total variances. For Clear Company's lens treatment, sales mix, contribution variance, and sales quantity, contribution variance. Okay, shall we do the sales mix variance quickly? Okay, start on the sales mix variance. Again, the subjects, there is so much of theory here. How to do all? Good question. But on the positive note, this has less theory than AB and law, and on the positive side, right? I'm sure. I mean, don't try to memorize anything. Just understand concepts. I'll give you like a small strategy to use at the exam. Those were easy. I mean, it obviously a personal preference, but I always found financial accounting more difficult than management accounting. Right? Even in my foundations, I did management accounting as the first exam. Then I did financial accounting. Even in skills level, I did management accounting first, or PM first, and then I did FR was my last paper. Or one before last, I think, or last I got. And so personally, I think management accounting is much easier because there is no rules. Just have to think freely and you're able to answer. There's no right or wrong answer apart from the calculations. So life is a bit more easier, right? If you look at audit, you're talking about standards, you talk about law, you are talking about a legal case. I think Salma, you said you're doing some law degree or something. Right? So for you, law must be easy, but for us, it was very difficult, right? So comparing in that aspect, I think this subject theory is easy because there's no hard and fast rule that something is correct. Okay, but don't worry, I am sure you will do well. And I'll tell you how you can attempt the questions paper. So next week we'll do a small mock call. In class we'll do. If it's possible, come physically only for next week if you want. We can sit and do the mock together. Right? Calculations are nice, theory is annoying. Yeah. I truly understand what you're saying, but this is the paper with the highest pass rate. Not highest pass rate, I think. Second or third highest. Highest is financial management. Okay, sales quantity variance. Let's quickly do that. And don't panic, huh? Just think of it like a breeze in the sitting in the ocean and breeze, feeling that breeze. That's how it should be. And at no point in the exam you have to give up. You don't give up. Whatever happens. I'll just share a story with you. We had a paper called P1, Corporate Governance. Right. And I went for that paper. And sorry, it was not corporate governance, it was advanced performance management, APM. I went for that paper. I can't remember one of those two papers. I think it was P1, corporate governance. Before they combined SPL, they had two papers before. It's not P1, it was P3. It was called business analysis. So they had a paper called business analysis and that corporate governance. They combined both of that and made it SPL. That's what we have now. But we had two papers before. So I was going for P3 business analysis paper. I went into the paper and I still remember I went through the 50-mark question. I went through the two 25-mark questions. Both of the 25-mark questions, I did not know what to do. I did not know what to do. So there were three 25-mark questions, they select two. The last one, it said something about a Porter's diamond theory. Still remember the question. Porter's diamond theory. And I couldn't remember the diamond. Can't remember the diamond, the 4 elements on the diamond. So then that question is out. I can't do the question. The next two questions also pretty blank. I know what to do. When I went to the 50-mark question, I did that question because I could do something there. I did that question and I thought, okay, now do I walk out of the exam hall or do I do something? Then I said, okay, I can go to the washroom. To the washroom, took a nice break, came back. Then I started the paper again, fresh mind. Somehow managed to answer both questions. I passed the paper. Pass mark is 59. Irrelevant how much I got. I think I got like 58 or 59, but irrelevant. But if I had given up and walked out of the hall, I would have to repeat that same question. Would I be teaching today? I don't think. And so, at any point in the exam, don't give up. Don't give up. Especially when you have MCQs, just something. Luck is your way, you know, you will get right. Irrelevant, but let's go to sales quantity variance. So you can use the same table once again. You have product, you have AQSM. This time we don't have SQ, but we call it BQSM. Take the difference, standard margin, and variance. Okay, so you have RLE and ICL 3764.79. The BQSM is the budget and value is 3,750 and 1,320. So this difference is small. It's 14.79 and that is favorable multiplied by 2,400. 35,496 favorable. Not 320 minus 320. Favorable. 13,050. Thirty-five 496 plus 13,025. 4521. Yes. Thank you, Ashraf. I think we got that answer. Okay. So I think we are mastering variances now, so that's good. Explain what each of the sales mix contribution variances, sales quantity contribution variance measures. They ask you the definition of sales mix variance and sales contribution. Okay. So we can write that definition down. Okay, so we'll say that the sales mix contribution variance. Sales mix contribution variance. There's the impact on profit. Sorry, I said sales mix variance, right? So read what I said.
Measures the effect on
No, before start first.
sales contribution.
Yeah, say sales mix contribution variance. Sales mix contribution variance measures the impact on contribution, not profit, on contribution. Of a change. The sales mix in the actual sales mix. In the actual sales mix. In the actual sales mix. In comparison to answer to the budget. The budgeted mix. The budgeted mix. Okay. Sales quantity contribution variance. Sales quantity contribution variance. Sales quantity contribution variance. Measures the impact on contribution. Measures the impact on contribution. In selling, a different quantity. Different quantity in comparison to budget. Right. Part C is saying using answers from part A and any other relevant calculations. Discuss the performance for the year just ended. There are up to 4 marks available for additional calculation relevant to sales performance, and 6 marks available for discussion. What are the other calculations that you can do? What are the other calculations you can do? The other calculations you can do? Doesn't necessarily have to be from the answers of part A. Maybe we can do a sales price variance and a total sales volume variance. Something that we can do. Yeah. I'll do that first. I think something that you can add on is maybe a sales price variance. And you can do a sales volume variance. Total sales volume variance. Sales volume variance. Okay. Total sales volume variance and sales price. Is there a possibility to do a planning and operational variance? Then I'm giving market share or market size. Very difficult. We'll do a sales price variance. The sales price variance would be actual quantity to actual price. Actual quantity into standard price, and you get your difference. You can do this for both products, RLE and ICL. So actual quantity to actual price. Actual quantity is 4130 into 2900. And this is 916 to 3400. This is 4130. 96. Budgeted price 3000, 3650. Here you get 11,977,000. $3,264,000. 12,390. $3,504. If you look at it in total, RLE has a variance of 430,000 adverse and 930,000 favorable. ICL has 240,000 adverse and 900,000 adverse. Will give you we have 499,000 favorable. It looks like RLE is okay, but there's a problem with ICL. Yeah. One more calculation you have to do. Otherwise, you can write down something here. Is now you have got the actual sales. You can compare actual sales versus budgeted sales. Right? You have RLE and ICL. RLE you have already calculated 11,977,000. And this was 3,264. Just calculate the budgeted sales. If they've given us the budgeted values, we can calculate sales. So budgeted sales will be 3,750 to 3,000. No? 11,250. And ICL on 320 to 3,650. 4,818. Okay. So after this, I think we can comment. I don't know whether you can do any more computations. So what can we say in terms of performance? Obviously, you will see that ICL is the problem. ICL is having a massive adverse variance of 1.14 million. Now, why do you think this happened? If you look at the scenario, they say that there was a merger and this EOS company was formed. And EOS has been reducing their prices for ICL. When there's a reduced price for ICL treatment, what's going to happen? People are going to move probably from Clear Company to EOS. So when they move from Clear Company to EOS, what is the impact on Clear Company? Their total sales variance for ICL has become adverse by 1.1 million. What you have to also notice here is that ICL has a higher profit margin compared to RLE, 2,500 versus 2,400. So if you look at your mix variance and quantity variance, it's adverse. Sorry, your mix variance is adverse for ICL, which means you have sold less ICLs than you were planning to sell. If you look at the budgeted value, it's 1,320, you sold only 960. Right? That is bringing a significant impact in terms of your profit margin, close to 900,000. Right? In terms of RLE, you have done pretty much okay, except the fact that if you look at your price variance, you seem to have lowered your price than your budget. Now, if you look at ICL also, your price has lowered in comparison to budget, 3,650 versus 3,400. Despite lowering your price, you still have not achieved the quantity that you wanted to achieve. You get my point? We need to explain those few points in terms of the analysis, right? Okay, so overall, it's a disappointing picture. I think there's close to 500 or 600,000 in terms of variance. So overall, we have to conclude to say that it's a disappointing performance because of the significant adverse variances that we're having. Okay, so let's write a few points on your own quickly, and then we'll move to the question. Quickly find that question for you. Okay. We good? Have you done this question? CSC Company. Alright. Ashwa, Gayatri, have you done this question? Salman, have you done this question before? I don't think we did it, but let's check. We've not done it, okay. No? Okay, shall we do this? Okay, so it's like no, so all capitals. Good. Right. So this is an interesting question, I think. CSC Company. Huh? Page number 200. No, I was just kidding, don't worry. Right. So CSA Company is a health food company producing and selling 3 types of high energy products, cakes, shakes, and cookies to gyms and health food shops. Shakes are the newest of the 3 products that were first launched 3 months ago. Each of the 3 products has 2 special ingredients sourced from a remote part of the world. The first of these, Singa, is the super energizing rare type of caffeine. The second, beta, is derived from an unusual plant believed to have miraculous health benefits. Sure, we didn't do this, right? I don't know, my memory is so fresh on this question. I don't know whether I've done it for a different class. Okay. We have done it? No. Okay. CSC Company's projected manufacture costs and selling prices for the 3 products are given as follows. So per unit selling price 5.4, 4.9, and 6. Costs are given. Ingredients, Singa 1.2 per gram, beta 1.5 per gram. So it's good to quickly calculate how many grams we are using for cakes, cookies, and shakes. Let's quickly calculate that. How do you calculate the number of grams? So 1.2 is per gram, but we are only using 0.3. For example, if you look at 1.2 per gram and shakes, you're using 1.2, which means you're using 1 gram here. Correct? This will be 0.5 grams. And this will be 0.25 grams. Correct? Right. Here you're using 1.5. So this will be 1 gram. This will be 0.5 grams. 0.3 divided by 1.5 should give you 0.2 grams. Okay. Other ingredients, labor 10 per hour, 10 per hour. So how many hours are you using here? Again, you can compute that. 10 per hour in the sense 10 divided by 1 divided by 10. So this is 0.1 hours. 1.2 divided by 10. 0.12 hours. 0.8 divided by 10. 0.08 hours. Okay. That's where we are at. Okay. Variable overheads are given. Contribution is given. For each of the 3 products, the expected demand for the next month is 11,200 cakes, 9,800 cookies, and 2,500 shakes. The total fixed costs for the month are 3,000. Okay. CSC Company has just found out that the supply of beta is going to be limited to 12,000 grams next month. Prior to this, CSC Company had signed a contract with a leading chain of gyms, Encompass Health, to supply it with 5,000 shakes each month at a discounted price of 5.8 per shake starting immediately. So you put up a contract to sell 5,000 shakes each month. The order for the 5,000 shakes is not included in the expected demand levels above. So what happens here? You have a demand for 2,500 shakes. On top of that, you have a further 5,000 shakes which you need to then give out to this particular gym. It's called Encompass Health. Okay. Assuming that CSC Company makes or keeps to its agreement with Encompass Health, calculate the shortage of beta, the resulting optimum production plan, and total profit for the next month. So there are 3 parts that you need to work on this question. Calculate the shortage of beta, optimum production plan, and total profit. For these 3 parts, they're giving you 6 marks. So then we can do the math to see how much they're probably giving us per. Okay. Right. I'm going to give you 5 minutes to try it out and then we'll work it. Okay, finished. Okay, calculate the shortage of beta. Shortage of beta. How do you calculate the shortage of beta? First, you need to find out how much you need in total. Yeah. So we'll work out the shortage of beta. We're looking at CSC Company. So part A, first part I'm going to work out is shortage of beta. Shortage of beta. Okay. So how do you calculate shortage of beta? Availability versus requirement. So how much of requirement do you require here? So cakes. We'll take the cakes. Cakes we calculated before 0.5. 0.25. 0.25 grams per cake multiplied by number of cakes that we require. How many cakes we require? 11,200 cakes. 2,800 grams. Then we had what's the other one? Cookies.
Sir,
Yes.
cakes for beta is not 0.25, right? It's 0.5, right?
Ah, yes. Thank you. Thank you. Yeah. For correction. 0.5 grams. So that would give you how much? 5,600 grams, I believe. Then cookies 0.2 into how many cookies were we looking at? 9,800 cookies. 1,960. Then shakes. Total shakes being 7,500. So 1 gram into 7,500. 7,500 grams. Total requirement. Total requirement is 15,060 grams. Total availability 12,000. So there is 3,060 grams total. Right, so pretty straightforward, right? Sorry, I closed the question. What was the page? 300.
200.
Sorry?
200. Question number 300 and 280.
Page number 200. Yeah. Part is sorry, the next part of the question we were looking at was, yeah. Calculate the shortage of beta, optimum production plan. How do you calculate the optimum production plan? So first thing that you need to do, what do you need to do to calculate the optimum production plan? Yeah. What? Yeah, find the contribution per limiting factor. Okay. So we have 3 products. We have cakes, we have cookies, and we have shakes. Right. So what's the contribution per unit given to us? Yes. So we have contribution per unit, which was 2.6. This was 1.75. This is 1.20. Then beta per unit, we had it here, which was 0.5, 0.20 grams, and 1 gram. So contribution per beta unit. So 2.6 divided by 0.5, that will double it. That will give 5.2. 1.75 divided by 1.75 divided by 0.2, 8.75. And this will give you 1.2. And you can rank it. This is 1. This is 2. And this is 3. But if you look at it, the shakes, there's two selling prices, no? The gym shake is being sold at a lesser price now.
Yeah.
They're selling it at 5.8,
0.2.
20 cents less. So which means shake for the gym shakes. This will be $1, 1 gram. So your ranking is 4. Yeah. Okay, just come to understand that the price is different, hence we are calculating one. Okay. Right, then calculate the optimum production plan for this. So obviously, you're going to start with your compulsory gym shake. So you can say product or other ranking, product, quantity, beta in grams, total beta. Then you can calculate contribution per unit and total contribution. Right. Okay. So ranking, we have to do the gym shake first. So shakes, the gym shake. So we have to supply 5,000 gym shakes. We're going to use 1 gram. So 5,000 grams will be used there. Contribution per unit is also 1. So we get total contribution $5,000. Then you have the first ranking product, which is cookies. So cookies, how many cookies do you need?
9,000.
Yeah, 9,800 cookies and 0.2 grams each. So 9,800 into 0.2, 1,960. The contribution per unit is 1.75. Get 17,150. Okay. Then you go to the next product, which is cakes. Can you produce all cakes? I think there was some 11,200 cakes that we required. But the problem is 11,200 into 50 grams. We need 5,600. Do we have 5,600? I don't think it's enough, no? 1,960 plus 5,000. Not enough. So we can't produce all the cakes we want because we have only 12,000 grams of beta. So work backwards to find this missing figure. So we can use only 5,040 grams. 0.5, work backwards. Get this figure. We can produce 10,008 cakes. That multiplied at 2.6. We give you 26,208. $5,000 into plus 17,150 plus 26,208, 48,358. And total profit for the next month. So you can deduct the fixed cost from here. Deduct the fixed cost. How much is the fixed cost? Only 3,000. So we can deduct 3,000. Get profit 45,358. Okay, so that's the answer to part A. One month later, the supply of beta is still limited and CSC Company is considering whether it should breach its contract with Encompass Health so it can optimize its profit. No further calculations are required. Discuss whether the CS Company should breach the agreement with Encompass Health. What do you think? If it was due, what would you do?
Like basically, the sales are generating 5,000. So I will take the rest if we put with the cakes as well as we put with the general sales that we produce and take the total contribution we get and compare and then
So what you're saying is you will satisfy entirely cookies and cakes first. Entire cookies and entire cakes. So you optimize your production. Then you basically go according to ranking is what you're saying.
Yeah.
Go according to ranking. Okay. Anyone online, Gayatri? What would you say?
and then if the ranking produce more contribution than the sales.
Okay.
Again, decide on the target.
Okay. Yes. Gayatri.
So I don't, if you, if you don't fulfill your contract, there might be, because you've entered into a contract, there might be legal implications by not
Okay.
satisfying that, and also maybe in potentially, like the goodwill of the company would reduce as well if you didn't fulfill the contract.
Okay. Good. Anybody else? Anything? Salma? Ashfa? Mithula? You been silent, Mithula?
I agree with Gayatri also because it's the newest product. So breaching the contract means that it'll show a bad reputation. So it's better to go ahead with the contract rather than breaching the contract.
Okay. Can I ask you an additional question? All of you,
But
not only Salman. Yeah, Gayatri, go ahead.
sorry, sir. To add to that, if by chance, obviously, since it's more profitable to make it in the ranking, you'd also have to weigh in what it would cost you if you did breach your contract, and if you were to breach the contract, and would it be more cost effective, or rather you'd earn more profit if you did breach the contract and pay a certain amount of penalty.
Okay.
And then if you still stand to gain, you would I don't know, I would probably maybe go with the ranking as well.
Okay. I'll be very frank with you all. If you at the exam say that we should breach the contract, I'm afraid they will not give you marks. Okay. And I'll give you my justification for this. Justification is this kind of a question can always test your level of compliance with ACCA Code of Conduct. right? So ACCA code of conduct. You have those 5 principles, no? Integrity and whatnot, right? So it can go against your professionalism. What you're saying is absolutely right. It makes a lot of sense to go with the ranking of the product. Supply of cookies, cakes, so on and so forth. And finally attend to this guy. Absolutely right. But in a question like this, always go ahead with ACCA code of conduct. Be an ethical person. Do the right thing. Okay. So, but all of you all said is correct. There will be legal consequences, definitely, because it's a contract. Okay. So if you enter into a contract and if you break your contract, there's a problem. You'll have to pay damages based on that. Obviously, when you have a contract or a case going against you, there can be implications on other businesses. You can, if you want, write down a statement. However, this breaching the contract can help improve profits. But it is not advisable to do so. Examiner will give you 4 marks. This is my personal opinion. I can be wrong. I don't know. I haven't spoken to the examiner about this. But when they put you in a twist like this, okay, always take the safe side. Say don't breach the contract, especially if it's a contract. But if it's like a crazy contract, you don't need like so bad for the company, then you can go up to an extent to say, okay, let's give notice and exit the contract. Get my point? That can be an option. But don't breach the contract just like that and say, no, we don't want. Because what will happen is examiner will judge you on your code of conduct for ACCA. Not that they will call you and shoot you and all that, but be a little diplomatic. Okay, good. Okay. I hope we've answered the question then. Yeah, we move on. Okay. The next part, several months later, the demand for both cakes and cookies have increased significantly to 20,000 and 15,000 units per month. CSC Company has lost the contract with Encompass Health after suffering from further shortages of supply of beta, Singa, and of its labor force. So multiple impacts. CSC Company has decided to stop making shakes at all, so no more shakes. CSC Company now needs to use linear programming to work out the optimum production plan for cakes and cookies for the coming month. The variable X is being used to represent cakes and variable Y to represent cookies. The following constraints have been formulated and a graph representing the new production problem has been drawn. Okay, we'll come to that. Singa 0.25x and 0.5y. Now you know what this 0.25x and 0.5y are, right? So I think we worked it out here. 0.25x and 0.5y for cakes. Okay. So this basically is your consumption of 4 cakes, your Singa and 0.5. So the 0.5 for cookies, right? Sorry about that. It's cookies. 12,000. Then beta 0.5 and 0.2, 12,500. That also we got. Labor 0.1x and 0.12y. That also I think we worked out. 0.1 and 0.12. X is less than or equal to 20,000, which means we are limiting it to 20,000. Y, we are limiting it. X comma Y is greater than or equal to 0. So that's your non-negativity constraint. Now in the class, what we did was we came up with this constraint. But now the examiner is giving it to you, which makes life a little more easier. Okay. Okay. So if you look at this, they have put the demand for cakes here. So this is demand for cakes, demand for cookies. This is your beta constraint. This is your Singa constraint and labor constraint. And here this is, what is this line called? Very good. ISO contribution line. Explain what the line labeled C 2.6x plus 1.75y on the graph is and what the area represented by the points 0, A, B, C, and D mean. That is this area. This is called the feasible region. Very good. Okay, so we'll write that down. So C equals to 2.6x plus 1.75, like what you all said. This is ISO contribution line. ISO contribution line. What does the ISO contribution line show you? It basically tells you that at any point on that line, the total contribution will be the same for any given mix of cakes and cookies. You need to write that down. You can say that the ISO contribution line gives the same total contribution, gives the same total contribution at any point on the line, at any point on the line, for any given mix, of cakes and cookies, of cakes and cookies. Can you repeat? Can you repeat?
Does the contribution line gives the same total contribution at any point on the
Yeah. So, Salma, you can say the ISO contribution line gives you the same contribution, same total contribution for any mix of cakes and cookies, for any mix of cakes and cookies. That's a summary of what I gave. Yeah. Okay. Then they're asking what does the area OABCD mean? You can say the area OABCD, the area OABCD is called the feasible region. For the feasible region. Full stop and say any point within this area, any point within this area is a feasible mix, is a feasible mix. Yeah, sorry, I got distracted with the mail that came. Yeah, so we can say then in order to maximize profits, did I say that? No,
Area is a feasible
mix. Right. Then you can say in order to maximize profits, in order to maximize profits, the company will have to operate. Company will have to operate at the edge of the feasible region. Comma, the optimal point being the furthest point from the origin. The furthest point from the origin. The furthest point from the origin. Okay. The next one, explain how the optimum production plan will be found. I think we already mentioned that. Using the line labeled 2.6 x plus 1.75 and identify the optimum production point. So here what you can do is keep a ruler, move the ruler upwards, the last point it meets, is your optimal point. So in this, it looks like point C. This it looks like point C. Just check and see. Yeah. Looks like point C. You with me? Okay, so you need to explain how you're doing this. Don't say that you're keeping a ruler and then moving it up. Just say that it's the furthest point from the origin. And in this case, it would be point C, optimum point.
you can say like when we move the ISO conclusion and
Yeah, you can say you can, correct.
for the furthest point, then that's the optimal production.
Yes, you can say that. You can say when we move the ISO contribution line upwards, the furthest point is the optimum point. And in this case, it is point C. It is point C. Right. Next part of the question is asking us, the rule out, yeah. Explain what a slack value is and identify from the graph where slack will occur as a result of the optimum production plan. Okay, so what you need to understand is optimum production plan is now this point here. That's the optimum production plan. Okay, at the optimum production plan, what are the two constraints that are meeting? Labor and demand for cakes. Okay. So which means you are fully utilizing labor at this point and you are fully utilizing the demand for cakes. So what is your slack then? Your slack will be for Singa and beta and demand for cookie side. Right. So if you move from point C, one level up, still not going to impact your usage of Singa, still not going to impact your usage of beta, or still not going to impact your demand for cookies. Right. So we'll write a small sentence there and then we'll explain. You can say a slack is where a particular resource is not fully utilized, or there is unfulfilled demand, fulfilled. Then you can say with regards to the optimum production plan, there will be slack for cookies, which means there is unsatisfied demand for cookies. There will also be slack. For beta and Singa. Which means that these materials are not being fully utilized. These materials are not being fully utilized. Okay. Right. Let's quickly read and see. Okay. Okay. I think we'll conclude there. Next week we'll do a small mock. I will let you know whether you have to do it at home and come, or whether you come here and do it. Ideally, do it at home so we can discuss. That will be a better option. But we'll see. Okay. Right. We can have next week then. Thank you guys.
Yeah, select variable and I can pay for the you should mention the constraints, not the points, other than the optimal one.
Follow.
Other, all other
Non-critical constraints are all select.
mentioning the point.